Welcome to the Homeownership Podcast presented by Momentum Realty, located in Hanover, Massachusetts. This series covers all things real estate and the best practices for buying, selling, and owning properties. Now here's your host, Sean Maloney.
Welcome to episode 123, Terms to Know When Buying a Home. I'm your host, Sean Patrick Maloney. Thanks for joining me this week. This week I'm going to talk to you about some terms you should know when buying a home. Not going to choose any specific order, and this certainly isn't all of them, but these are some terms that you should know and understand when buying a home. The good news is if you work with one of our agents over here at Momentum Realty, one of our Move mentors will make sure that these terms are something they understand and explain anytime you need it to be explained to you. Remember, working with the right people can make sure you understand things. First off, let's hit on mortgage. A mortgage, a lot of people think, oh, it's the money I owe, but it's actually the agreement between you and the lender for the money you owe. The loan is the money you owe, but the mortgage is actually the agreement between you and the loan company. So now how about deposit? Deposit and down payment are ones that are used interchangeably. But the truth is they're two different things. The earnest money deposit is the money that's on the line on the offer or holding the purchase and sale agreement that binds you to the home, that there as a buyer, if you void the contract for just no reason at all, like you don't have a contingency, it's money you could lose. Whereas the down payment is actually the money that you are putting forward towards the loan money. So the down payment money comes off of the loan total. Yes, in the long run, the deposit ends up reverting into your own money. It's not additional money. It's money used, but it's at risk during the time where you're just in contract. If you were to fail to meet your obligations on that contract, you'd lose it. Whereas again, the down payment money is the money that tells you how much percent of the home value you are loaning versus how much is your own money. Now let's go over another two that are confused. Pre-approval and pre-qualification. A pre-approval is a document stating that the bank has looked into the amount of money they can lend you in a deeper way. They've looked into usually your pay stubs, they've looked into your past taxes, they've looked into your credit score, and a lot of other things. Whereas a pre-qualification a lot of times is only really just stated information. You told them how much you make, you told them your credit score, and a lot more is left to be verified. So when shopping as a buyer, you always want to see the words pre-approval if you want your odds better of getting accepted. Well, some institutions don't offer pre-approvals. If you've all possible, you really want to have a pre-approval over a pre-qualification. Now, if you're one of the lucky people who has a lot of money and you are going to be paying cash, you may be familiar with the term proof of funds. Proof of funds means that you're showing that you have the money that you say you do in order to purchase the home, whether it be a cash purchase or a very large deposit. You're going to give them a proof of funds. The proof of funds can be in a lot of different forms. It could be a simple screenshot of a bank account. It could be the mortgage. It could show that you don't owe a mortgage on your home. It could be a 401k. It could be a lot of different things. Just remember, when doing proof of funding, they don't need your routing number and account number on the documents. It's for safety's sake, you want to make sure those are removed. But what you do have to make sure is that it's on the proper letterhead for the account. It can't just be a Microsoft Word document you made stating what you have, because otherwise people could be millionaires just by typing it into Microsoft Word or something simple like that. Now let's name a couple different types of loans. We have an FHA, we have a VA, we have a 203K, we have a USDA, we have a conventional, we have a construction. Knowing the difference between all these is important. Say a construction loan, this allows us to buy the land at one piece, pay for the site work to be done, pay for the home to be built, pay for the landscape, and enroll it all in one package. 203K loan is one where we actually are able to borrow money for repairs. Then we have FHA, which is a federally backed loan, and a VA, which is a veteran loan. Then we have conventional, which is just your regular average loan, but not backed by the federal government. FHA, VA, both come with some different overlays that you need to make sure happen. It's called the FHA or VA appraisal, and that's the one where if you have peeling paint, chipping paint, missing handrails, or broken systems, you may get denied the loan. Escrow is where the money is held on deposits. This is a safe account. It is not mixed with the brokerage's account. Typically, the escrow agent is going to be the listing agent. Sometimes it will be an attorney. Other times it could possibly be the buyer's agent. But remember, most brokerages have an escrow account. The only time you see the buyer's agency holding the escrow is when the list agent does not have an escrow account. There are new online companies that don't have escrow accounts. It is kind of strange, but the truth is anytime money enters escrow, there's only 3 ways it can come out: completion of the contract, a court order, or a signed mutual release from both parties. So we can't just release money because one side or the other believes they're entitled to it. No matter what happens in the deal, we need instructions either from court, the 2 parties, or the closure of that contract. Now, purchase and sale agreement. The purchase and sale agreement is a document that's made after you get an accepted offer. That document states all the different nuances that are going to happen. How many days, what days, where, when, all that. So where's the closing? When's the closing? Who has to have what done by what days? What type of insurance needs to be on the property? What type of commissions are going to be paid out? It's going to set the rules to the deal. An addendum. The word addendum just means it's an added on document. It's a very simple document. There's lots of different types of addendums, but for the purposes of this, just a blank addendum, it's just another sheet of paper to write some more information that couldn't fit within the boxes already on the paper. So a lot of times you'll say, see addendum, and when you look at it, that's where the information will be. Home inspection. Home inspection is where someone comes out, you pay them as the buyer, and they check the home over. They check over lots and lots of different things. They look at the condition of the roof. They check the plugs to make sure the electricity is right. They look in the panel and make sure the wiring is correct. They usually turn on the heating and cooling systems and make sure they go to temperature. They check all different things throughout the house to make sure you, the buyer, are safe. You have the right to waive a home inspection, but you do not have to. If you waive a home inspection, it can improve your odds of getting a home, but it also increases the risk involved. Next, lead paint. Lead paint is a paint that was used previous to 1978 that people have the right to test for. When you buy a home, you automatically get a 10-day right by the state rule to test for lead paint. That said, again, it's another test that you don't have to do, but if you have anyone under the age of 6 living in the home, you're pretty much obligated to have that done. Agency disclosure. This is a funny one. This one is often misconstrued to be a buyer agency agreement. The agency disclosure just simply states that you have options. The state of Massachusetts mandates that on the first talk of any specific property, that your agent give you an agency disclosure. On there, it's going to talk all about what's a buyer agent, what's a seller agent, what's a facilitator, what is dual agency, what is designated agency, and give you the option to your rights. It's not saying that you're obligated to work with this person. It's just telling you that you have options. The one that some people misconstrue it to be is a buyer agency agreement. A buyer agency agreement says that you are going to work with this specific agent in purchasing a home. And if you purchase a home, you're going to owe that agent a commission. If you purchase a home with a different agent than the agent you're in the agreement with, you may owe them a commission as well. Remember, when signing a buyer agency agreement, it's really important to understand what's on there. It may say that you owe money, even if the MLS system doesn't pay the full amount. If the seller is not going to pay a cooperating compensation, you may end up owing that money. I believe in buyer agency agreements. I think they're a great thing because it allows your agent to be dedicated to you and you to be dedicated to them. It's just really important you understand the terms on it. Now let's talk fire inspection. Fire inspection is what's done to make sure the carbon monoxide and fire smoke detectors are present in the home. This has to be done within 60 days of the closing in the state of Massachusetts to prove that we are in compliance with all fire code. The fire department comes out and takes care of this one. Title V. This is the code in Massachusetts that covers septic systems and what quality they need to be in order to transfer. To transfer a property in Massachusetts, you either have to disclose that you have no Title V, or you need to allow the person to know that you have a passing Title V. If you have a failing Title V, the buyer has so much time to fix it, but most of the time the sellers will have a passing Title V, or they'll offer a great discount to the buyer for buying it with a bad Title V. Sometimes a bad Title V is as simple as a couple repairs. Other times it means you need a new system. Co-broke. Co-broke is where you have a buyer agent and a listing agent both working together. A listing agent is the person who represents the seller in their best interest. You got to remember, as a buyer, you do not want to reach out to seller's agents unless you're looking to get into what's called dual agency, where they represent both you and the seller. But if you think about obedience, loyalty, disclosure, confidentiality, accountability, and reasonable care, you can see how when someone moves into dual agency, they may not be able to keep all those roles. So I highly recommend having your own agent because that gives you the right to representation. HOA, otherwise known as Homeowners Association. It's an organization in a subdivision or planned community, sometimes even condo, that makes the rules and enforces them for properties and residences. Realtor. Realtor is a word that's interchangeably used with real estate agent. It is not that. Realtor is a private organization. It's a trade group for people who are realtors. They are saying that they hold themselves to a code of ethics and that they're holding themselves to a higher level. We at Momentum Realty are realtors. MLS is the multiple listing services. That is where agents go to search for properties. Similar to Zillow, except for this is where all the information is fed down for all those third-party sites, and this is where us as real estate professionals spend our days searching for property. Estate sale. An estate sale is when someone passes away and we are selling their house after. On an estate sale, there's a lot you want to watch out for as far as making sure they have a license to sell, which is the ability to sell that the estate has been cleared by the state of Massachusetts. On an estate sale, you really want to make sure you work with an agent. Short sale. A short sale is when you owe a bank more money than you're going to sell the home for. And the list agent and the seller are to confirm that with the bank that they'll be able to sell. A lot of times this is a great option for people who are behind on their mortgage but don't want as much as a foreclosure. Doesn't hurt their financial score as much as foreclosing, but it still is going to have an impact and ultimately your credit score is going to go down. Seller's disclosure. Seller's disclosure is a document that states everything that the seller knows about the property and any problems that they have. Same with also giving you information on different updates and upgrades they've done and who's servicing the property. The appraisal. The appraisal is done to value the home. Home appraiser can be done, could be cash sale, could be a bank. It normally is ordered by the bank once you get an accepted offer. If you're buying cash, you can decide whether to get an appraisal or not. But that person is a professional that comes out and gives you a valuation of the property. Contingency. A contingency says that if this doesn't happen, that won't happen. So we have home sale contingencies, which says I have to sell my house in order to buy your house. We have home inspection contingency, which says your house has to inspect the way that I see fit, or else I'm able to walk away with my deposit back. Mortgage contingency, saying that we have to get a mortgage in order to move forward with this purchase. Otherwise, I will be getting my deposit back. So contingencies are something that protect our deposit from that contract to purchase. Title search. This is something the attorney's office does to make sure that the owner actually owns their property and that there aren't any liens, encumbrances, and other things like that on the property when it comes to time for transfer. As is. This is a statement that is used wrong all over the place. As is means that they're just selling you the house as is and they're not willing to do anything when you negotiate with them. What do I mean by it's done wrong all the time? Well, we see all the time where they say as is, but they don't actually understand. In the state of Massachusetts, we are a known material defect disclosure state. So this means if you know there's a problem, you have to disclose it. Writing as is does not cover you and make you not have to tell what's wrong with the home. You still have to tell what's wrong with the home. So as a buyer, when we see as is, we want to make sure our ears perk up and we pay attention to what's going on. DOM, otherwise known as days on market. That's going to be how long has the property been on the market for? What date did it come on until now? How long has that been? Equity. This is the amount of money of the home that we own versus the amount that we have loan. So the equity is the actual cash value that we have in between paying off the loan and the extra money that would be there. So if I sold the home, paid off the loan, how much money is left? That would be my equity. Multiple offer. This means that more than one person has made an offer on the home. Chances are there may be a bidding war. Contract to purchase, last but not least, most important, is actually what an offer is called here in Massachusetts. This is the document that says we are offering you this much money under these terms to buy your home. Guys, this is just a few of the terms in real estate. As you can tell, real estate is a huge industry, and there's a reason there's industry professionals. If you're looking for someone to help you on a home purchase, reach out to us and we'd be happy to set you up with one of our Move mentors. Thank you so much for listening this week. Make sure to tell all your friends and family about the podcast, as well as we have a Facebook group, a blog, and a newsletter that are all free, giving out great facts on buying, selling, and owning a home. Thanks again, and have a great week.